Right, we're going to take a short look at one of the real hot topics of the moment, and it revolves around AI. And is AI the next $1 trillion boom, or is it in fact the next big bubble? Analysts across Wall Street are divided, and the stakes couldn't really be higher. It's fair to say AI investments are exploding. McKinsey estimates global spending on AI infrastructure could hit $5 to $8 trillion by 2030. But beneath this excitement, some people are talking and seeing danger signs. Now, the Bank of England says markets look stretched, especially around AI stocks. OpenAI's valuation soared from $157 to $500 billion in just 1 year. Anthropic tripled to $170 billion in a year. Some pretty impressive gains. Yet an MIT study found that 95% of companies investing in generative AI at the moment have yet to see a return. They've seen nothing, no return so far at all. Now, Palo's Torsten Schlock warns AI stocks look more overvalued than .com names did back in 1999. In fact, the top 10 S&P firms at the moment are now detached from their earnings, and that worries some. The IMF sees echoes of the .com bubble as well. Massive optimism, sky-high valuations all coming into play. But unlike the 2000 crash, today's boom isn't fueled by debt. Economist Pierre-Olivier Gourinchas says that any fallout may in fact be softer than we saw back on the .com bubble. Paul Krugman agrees. The difference this time, where they're saying the boom is led by big tech, not startups. He predicts not a crash, but maybe a tech bro bailout. Others, of course, are slightly more bullish, and we've said that there's a lot of differing views here. Goldman Sachs are arguing valuations remain within reasonable bounds and calls this the early stages of a long-term rally. Allianz says the boom is underpinned by fundamentals, though fragile. Indeed, the Magnificent Seven each spent around $36 billion on AA last year versus just $2 billion for an average S&P company. This extreme concentration makes markets vulnerable. I think that's very fair to say. But again, there are other opinions. Mary Daly from the San Francisco Fed calls it a beneficial bubble. But why? Well, strong cash-rich firms are leading the changes instead of startups. Even if prices fall, the infrastructure and innovation remain, just like the internet did after 2000. And Wedbush's Dan Ives goes even further. He's saying that this is the start of trillions being spent in the fourth industrial revolution. Big tech is building a future like Vegas in the 1950s or Dubai 30 years ago, which are quite large statements. So with all of these contradictory views about, is AI a bubble, or is it the biggest boom of our lifetime? Unfortunately, like a lot of things in the market, only time will tell.